This week, market sentiment is driven entirely by expectations of stimulus measures from major central banks. Yesterday, the Fed Reserve announced an emergency cut to interest rates. Forex experts are highly sensitive to any macroeconomic data which assures monetary authorities of radical measures. What news will be the key to market sentiment in the final 2 days of the week? Let's watch a video calendar on InstaForex TV channel. The Reserve Bank of Australia has already ventured into crucial measures, having trimmed the cash rate to a record low. Traders will find out the reason behind this move on Thursday, as Australia is due to release a trade balance report. Analysts reckon that exports could have contracted 1% in January. Importantly, Australia is China's main trade partner, supplying commodities to its industry. In fact, China's manufacturing sector logged a severe downturn in February amid the coronavirus outbreak, so weak trade data came as no surprise. As a result, the outlook for Australia's economy is bleak. In this context, the Aussie dollar is set to lose ground. On Friday, investors are anticipating the key report on the US labor market that will enable the market to judge whether the US economy has been already hurt by the coronavirus. Experts assume modest employment growth in February following robust hiring in January. Some experts warn that the actual employment growth could have been worse than the pessimistic forecast amid the alarm over the slowdown in the global economy. Average hourly earnings in the United States are unlikely to discourage investors. Despite a 0.3% gain in wages on months, an annual growth rate is expected to edge down to 3% in February. The worst-case forecast is a decline to 2.9%. That would be the weakest score in the latest 12 months. In case of such dismal data, traders will have an excuse to sell the US dollar, but not against the Canadian counterpart. In parallel with the United States, Canada is also due to report on its labor market. The employment change there is going to be more downbeat. Canada's labor market is expected to add just 10,000 new jobs last month. Besides, the unemployment rate could have posted an uptick to 5.6% from 5.5 months ago. Such data is certainly bearish for the Canadian dollar. Apparently, sentiment on the Canadian dollar will depend on trade balance data for January, and the report could reveal a growing deficit. Nevertheless, the negative impact from such data could be offset by a recovery in the oil market, which is seen in a barometer over the Lunis value. On Friday, OPEC is holding a meeting. The cartel and its allies could adopt the resolution of further supply cuts. This will encourage a further rally of oil quotes. Apart from the above-set events, it would be a good idea to take notice of other reports. On Thursday, traders will focus on speeches by governors of the UK and Canada's central banks. On Friday, don't miss retail sales data from Australia, factory orders from Germany, and IVPMI from Canada. You are watching Forex Trader Calendar on InstaForex TV channel with me, Kate Stichina. We wish you profitable deals.